welcome to NDTV Profit. I am Monal Sanghvi, and we're going to discuss India's largest drug maker that's come out with its results a day before, and Sun Pharma, of course, with its profit up 17% almost and margins coming in at a 27% on the back of a strong show in the US and India markets, which make up for a total of 65% of the company's revenue. Their global specialty sales were up 24%, excluding a milestone payment that it received in the quarter. Joining us, we have Mr. C S Muralidharan, the Chief Financial Officer at Sun Pharma Limited. Thank you so much for joining us today, sir.
It's our pleasure.
I'm going to pick up from the global specialty, which has been attracting a lot of interest from investors. I mean, that has been the differentiator for Sun Pharma, setting the bar higher than most other companies. Currently, the segment contributes around 19% to the total revenue. So how is this expected to shape up over the next 2 to 3 years? Can we expect the contribution to go up in terms of revenue and also in terms of the growth rate?
In terms of the global specialty revenues, if you look at about 3 to 4 years before, it was constituting about 7% plus or minus. And today, for the quarter, if you look at overall global specialty, it's almost inched up upwards of 20%, almost there. We have been consistently maintaining momentum and focus on this global specialty business, and growth rates have been ranging between 20 to 25%, depending on the market and depending on the quarter and the overall seasonal fluctuation. But our continued focus remains on this business to grow further across the markets where we participate in this business.
So can you give us, what sort of a contribution should we be looking at from the global specialty business in the coming years?
We are not giving any specific guidance on any specific business segment as such. We generally give the overall corporate group's revenue guidance.
Okay, sir.
However, we expect this global specialty business will increase as a percentage contribution to the overall consolidated revenues as we have seen in the past years.
Sure, sir. So also, there's been a couple of issues on product recalls throughout the year, that we've been hearing of, and issues at Halol and Mohali are very well known in terms of the US FDA. So would you be looking at setting up alternate facilities to make up for these two, or by when can we expect a resolution on this front?
So both on Halol and Mohali, we maintain that we are continuously working on the remediation process, and at this point of time, we are not able to commit exact timelines when the complete resolution will happen or the re-inspection will happen on these sites.
Okay, sir. And so what about the product recalls? I mean, that's associated with plants. So do we see those going down? Are we seeing some moves from transfers?
Yep. See, we're talking about product recalls?
Yes, the ones in the US.
I think product recalls is part of integral to this overall pharmaceutical business, and we at this point of time will not like to attribute any specific site as such.
Okay, sir. So there's been a lot of conflict around the Red Sea, and there's talk of maybe freight prices going up, raw material costs going up. Are we going to see some pressure on the cost front for Sun Pharma?
So as far as the situation of Red Sea, we are continuously monitoring, and we also mentioned in the earnings call that our primary objective is to ensure continuity of supply chain and availability of the medicines to our end customers. For this, if we have to move the channel of transport, we will definitely do it. That's what we would like to comment at this point of time.
So there's also a lot of anticipation building around Taro since you've revised the price for the minority shareholders. What are your conversations on that front? Because from what I understand, this could be the third attempt at acquiring the minority stake. Is it quite positive? And if yes, if this were to go through, what would you do with the cash balance that you will acquire from Taro?
So the process is on at this point of time. We have signed a definitive merger agreement for acquiring the remaining stake that Sun does not own. We have given the price of $43 per share, which is about 48% premium to the unaffected price of May 25, 2023. However, the merger agreement, which we executed subject to various closing conditions, including shareholders' approval, it's better to wait for us to cross the finishing line before we take up any other matter regarding Taro, being a public company.
Sure, sir. So just trying to understand on the R&D front, what usually is our split between the global generics and specialty? How do we allocate our budget, and are we looking at any other inorganic opportunities as well?
So R&D split is approximately 60-40 overall, I can say, between generics and specialty typically, and growing more in favor of specialty as we continue to invest further in our global specialty revenue. Global specialty business is the key co-driver. And for the current year, of course, you would have seen that for the quarter, we are about 6.8% of sales overall R&D investments. And we expect also the full year to be somewhat closer to our lower end of guidance of 7 to 8%, which we had given earlier.
Okay, sir. So for the allo-CPR drug that is expected to come out, so by when will it come out, and how big is the opportunity? Since the time we made the announcement, we have a couple of other competitor drugs also in the market. So how do you see this portfolio shaping up?
So alopecia areata, we have already mentioned that we will launch on approval. And the PDUFA date is, of course, July 24, which has been already shared. And let's wait for the approval and then take it forward from there.
So we'll be launching on the timeline, right?
Yeah, that's what we have maintained at this point of time.
Okay. So what kind of margins can we expect in the coming year with the India business also? So there's a lot of conversation around NLEM seeing some, drugs under NLEM seeing some pressure. Also the overall, do you expect the India business to grow at the IPM levels? Do we expect to outpace the market? And on an overall basis, how would you guide for Sun Pharma's margins in FY25?
So first, taking the India-related question, India business in Q3, of course, grew about 11.4% year-on-year. Strong performance across various therapeutic segments. And our aim is always to perform better than the market. However, it's very important to note that this growth is substantially supported by the underlying volume growth as compared to the India pharmaceutical market, where the growth is majorly driven by the price. When you come to Ebitda margin, however, we are not guiding for any Ebitda margins. We continue to remain focused on cost efficiencies throughout the organization. After even consolidating the expense of newly acquired business like Concert and others, if you look at the last 8 quarters, our margins have been in the range of 25 to 26% plus. Our key core drivers like global specialty business, India business, apart from other business, have maintained strong growth momentum, which is also a key factor for the resultant Ebitda margins.
Thank you so much, sir. It was a pleasure speaking to you.
Thank you so much.